Hi there, Serial Trader here. I just want to check in on the major US indices and just to follow up on the last video. So I was seeking just a little bit more subdivision to finish wave 5 of C of 4 for our overall expanded flat wave 4 there. Now we didn't actually get any lower on the cash session since that last video. The next day we opened positive and never looked back. But I think this is a good example of a situation where the futures basically finished the pattern and already started reversing before the cash session could reflect that. And that does happen sometimes. Sometimes the future session means very little. It just kind of drifts slightly up or slightly down. No meaningful price action, low volume. But sometimes during these more volatile scenarios, you do get meaningful action in the futures that does translate into the overall cash index the next day. And I think that's what we got here. So let me just go over to the futures. Well, before I do that, just to recap. So we had some areas of interest here. We had the 50% retracement of wave 3, which would have come in at 4,036.14. That seemed like a nice target. We also had the potential gap closure, which did not happen, but we had the potential gap closure at 4,020.63. That didn't happen. Now, when you have a gap like that and you're coming down aggressively and then you can't even close it, at least in this case you couldn't close it on the regular hours, to me that's just a sign of underlying strength. Like, you couldn't even come down and do a routine gap closure with such a supposedly strong down move. To me, that's an important data point to take in. Also, we had our wave 4-1 overlap level there, never even got threatened at all, and that was at 39.8387. So I'll go ahead and get rid of that. Now, I do want to go to the futures just to show how that actually did basically complete the way we were looking for it to there without being reflected on the regular trading hours. So futures, same idea, basically the same pattern exactly. We got the March low, then we got a 1, ABC for 2, we had the 3, working our expanded flat wave 4. Now, see, on the futures here, we did get that little more or additional subdivision to finish off that fifth wave of C. And if I'm going on the shorter time frame, you can really get in the weeds and see some nice clean subwaves there. But I just want to, on this larger time frame, point out we got very close to that 50% retracement that looked attractive there on the cash session, and that would have been on the futures 4,027 and a quarter. We went as low as 4,029 and a quarter. So two points shy of a perfect 50% retracement. I like that. That looks really nice. And obviously we've had a huge reversal off that level. I think as far as retracements, okay, let me just snap that the way I want it. Throw up some of our fib levels. So we've already gone beyond the 61.8% retracement. So for any bearish biased analysts looking at this, I mean, your case for making this, okay, instead of calling this ABC for 4 and somehow calling this the actual top there, which I would highly disagree with, by the way, but if you want to try and make that case, then you would say, oh, well, now we got our first impulse wave down, 5 waves down for either 1 or A, and we're doing our bounce up in either B or 2. Well, you've already gotten past the 61.8% retracement, so your hopes of this only being a corrective bounce are already diminishing. And I mean, that was some pretty powerful price action there on Friday. I don't think we're just going to stop here. I mean, we'll probably pause. We might pause at the 76 retracement or have some minor consolidation. I mean, we could even complete a little wave 1 up, do a little wave 2 down. But I really am skeptical that we're going to come down here and take out the lows and actually have something more substantial yet to the downside. As you know, I'm working still one more fifth wave up to actually complete this sequence off the March lows. So I'm sticking with that as long as we hold last week's lows. That's as simple as I can make it here. Okay, so I just want to point out that yes, we did actually achieve some of those lower levels on the futures to finish wave C of 4, despite it not being reflected in the cash session. So I'll just go ahead and delete some of these smaller wave labels. We can just make this a clean C of 4 in place, get rid of that fib retracement, get rid of that gap fill level, And let's just focus now on getting up here in wave 5. So I think what I should do, now that we have had a more substantial wave 4 than I was originally looking at a couple weeks ago, or whatever, a week and a half ago, let's recalibrate here. So let's draw a new Elliott final channel, again connecting the wave 2 low with the wave 4 low, in parallel off of the wave 3 high. So this will just give us a somewhat different time and price view, if you will. Now let's just recalculate some of those common wave 5 targets. So if we do the wave 1 versus 5 equality off of the wave 4 extreme, this will change our targets a little bit from that last calculation, but it'll still, I think it'll still get us into a similar zone, maybe a little lower than the 4400 area, but let's see. So wave 5 versus 1 equality, that would be 43.1741. And then we have the waves 1 through 3 off of wave 4, the 618 relationship to wave 5 of that. Let's get that up there. That would get us to 43.6306. Then we have some reverse fib projections. So let me just get that, or extension of the range, however you want to term it. So the extension of the range objectives, 1.32 and 2. So 1.32 gets us to 43.0724, 2 gets us to 44.1920. I mean, that's probably enough targets to go with. So basically we have a zone here, I'd say between 4,300 and 4,400 of interest as far as finding a potential peak here in wave 5. And as far as timing goes, again, let's do our timing relationships. So the time duration of wave 1 compared to wave 5, if it was equal, that would get us to the 25th of May. And what else do we got? The time duration of wave 3. So this is the time duration of wave 3 compared to wave 5 off of wave 4. That gets us to, okay, that would take us into about the middle of June. Possible, although I'm kind of more interested or more favoring a potential pivot towards the end of May or early June, as that is I've discussed before, that is often when you get good tops or bottoms. If you're going to have one, that's usually the time you'd look for it to happen. Anything else here as far as time goes? I mean, if we just simply kind of eyeball it, if we get to the top of the channel, yeah, I mean, the pace at which we're moving, obviously we're going to have some little pullbacks along the way. I really like kind of into the month end, early June. That seems like a good area. So anyway, a little bit of readjustment, but bottom line really hasn't changed a whole lot since we have not invalidated this pattern. And the bottom line is we're still looking for, let's say, 43 to 4400 range. And we're still looking for that maybe into the end of May, early June, I'd say is kind of the sweet spot, if you will. And what else? I mean, that's probably good. We'll just have to see how this wave 5 develops, right? And once we get some more subdivisions and clarity within this wave 5 itself, we can probably start making some measurements based off of those as well, as far as at least maybe not time so much, but as far as price. So next week should be pretty interesting, I think. Okay, so that's good for the wave analysis here. Let's go to the Thinkorswim candlestick chart. And okay, so we didn't even quite hit the 50-day simple moving average, at least not in the regular session, as I discussed there already. And we've already gotten back above the T line, so the 8-period exponential moving average, and we've gone above and closed above the 20-day simple moving average. So really, if you're bearish, that should be pretty concerning that you've had such a recovery and already regained some important technical areas. And you can see we almost got oversold on this oscillator, and now we're starting to turn back up. So, I mean, bottom line, as long as we hold, and by the way, I am long ES, so some futures contracts from these lower levels. As long as we hold that low, so on SPX it's 40.56, On ES, it was a little bit lower, 40.29 or whatever it was. That's your line in the sand. Hold that, and we're going higher. And you can position against that, like as your stop, and seek higher levels from that. So you have a clear level to define a trade against. Obviously, this is not the ideal entry. You should have been trying to get in at lower levels. But if it was a little too scary at the time, you'd have to wait for some sort of short-term pullback to try and get a trade on there. As far as daily candles, I mean, not a clear candlestick pattern, but let's look at the weekly here. Weekly, I mean, other than a long lower shadow, I don't know if you'd really call this a bullish hammer. Usually you'd want to call it a hammer when it's at the bottom of a range, not near the top of a range. I would just remark, okay, the weekly candle has a long lower shadow, so that's a sign of rejection of those lower prices. If you're a bear, you might want to try and call this a hanging man, but I'm not really digging that. Usually the hanging man has I think has a smaller body than that. So not much else to say about that. All right, that's good for SPX. Now let's look at the Dow Jones Industrial Average. I think it's basically the same idea. Yes, we had a little short-term pullback that scared some people. Didn't even hit the 50-day simple moving average. And now we've reversed nicely. We're back above the T-line, back above the 20, etc. So nothing really else to say there. Dow, same idea. Long lower shadow on that weekly candle, rejecting lower prices. Basically the same as SPX from what I gather here. Now, one thing that might deserve some more time here is the Nasdaq. And maybe I'll go to the... I'll come back to this, of course, but I'll go back to the trading view charts here. And let's just go look at... I'll just use the NDX, but this will apply to the composite as well now that they both fallen enough to make this a thing, to make it substantial. Okay, let's just remove everything. Maximize here. Okay. So we had an ABC correction on the Nasdaq here, right? And that was into our March low. Now from that March low, there's a few things you can do here. You can say, all right, this is just another ABC up, and either we're coming down in a expanded flat or a running flat, or maybe a triangle, like a running triangle. And let me just illustrate a couple scenarios there. So let me just bump that degree up. So, and I'm just going through the scenarios, and then I'll actually say what I think we have here. Weigh in on it, basically. So, in this case, where we'd be working an expanded flat, and that's where you have a three-wave move down in wave A, you have a three-wave move up in wave B to a new extreme, to a new high, and then you have a five-wave move down in wave C to take out that A wave low, and then you go higher after that. So expanded flats basically do the maximum harm to both sides of the market. Kill bears, kill bulls, kill everyone, and then go up eventually afterwards anyways. Or a running flat where you don't achieve a new low, but you still make a five-wave move down in wave C, and then go up. And that's just where the C wave isn't strong enough to get below the wave A. That's possible. Or in a running triangle, where you have a 3 down for A, 3 up for B, 3 down for C, 3 up for D, 3 down for E. And let me, again, get this degree up here. So that's a possibility, but not one I'm overly fond of, okay? Because it doesn't really jive that well with the other indices that I'm looking at. It would suggest basically more of a choppy sideways period for a lot longer, which I don't think that's what's in play here. But just highlighting some potential scenarios. Now here's what I actually think is happening. Okay, so I do think, yes, we had a three-wave decline on the Nasdaq. In this case, the Nasdaq 100, same idea with the composite though, into the March low. And then I think you can easily get this as a 1, 2, 3, 4, 5. Now, I don't like the fact that the wave 4 is a little short and not quite in proportion to wave 2, but it's not a deal breaker. You can still get 5 non-overlapping waves to a new high. Okay, you can definitely call that a 5-wave sequence up to a new high. And then look at this. So this sure can make a strong case, or I can sure make a strong case for this just being 5 up off the March lows and then 3 down. Okay, and let's get that degree the same. So if that's the case, if we got 5 up off the March lows and 3 waves down into last week's lows on May 12th there, and let me also do some retracement. So we came right into the sweet spot here between the 50% and the 61.8% retracement here on the Nasdaq 100, and now we reverse nicely. So where does wave 2, if this is a, now this is really bullish, granted, but I'm just trying to be as objective here as I can about the pattern. What is the most common wave 2 retracement level? Well, right around the 61.8% retracement. And also, I'll point out something else. So here on the NDX, again, just like the cash session on the S&P, we actually did go a little lower on the night after that to finish the sequence, but it's not reflected here on the cash session. So before I come back to this and finish what I was going to say here, let's go over to the Nasdaq Futures, so NQ, Nasdaq 100 Futures, and let me just make some remarks about that. Do I want 4 hour? Let's see here. I think daily will suffice here just fine. Remove all this junk. Okay, yes. So let me just get us back to where we were on the cash index there. So potentially a 1, 2, 3, 4, and 5. And we barely made a new high in 5, but we did actually make it here, even in the futures. I guess get this degree where we had it there on the cash chart. This would, of course, would be the ABC for the possible 2. And I won't worry about the rest of this, but so remember when I was saying we almost got that 61.8% retracement on the Nasdaq 100? Well, I think we actually basically got a perfect 61.8% retracement on the Nasdaq Futures. And yes, look at that. So let me just remove this 50 and 76 just to make this nice and clear. So the 61.8% retracement on the Nasdaq Futures was 12,916.50, and what did we bottom at? 12,915. So I'll tell you, on the Nasdaq, a 1.5 is essentially nothing, okay? It can move way more than that in just mere seconds. So that is a fantastic, near perfect, I'm just gonna call it basically perfect, 61.8% retracement here on the Nasdaq Futures. So that really argues, okay, we can count 5 non-overlapping waves up to a new high. We got a clean 3-wave decline. I'm just curious, did we have AC equality along with the 61.8% retracement? No, we went a little bit beyond equality. So we went between equality and the 1.382 relationship between A and C. But that's perfectly fine. It's still very nice. What really grabbed my eye was that basically perfect 61.8% retrace on the Nasdaq Futures. Okay. So I think the Nasdaq might be a little bit better because it hasn't moved as much off of its lows and compared to its former highs as the S&P, for instance. So if you want to try a long and you don't quite like how far the S&P has already come, you might want to look to the Nasdaq, in this case, futures here, so NQ. Or if one contract's too big, there's the mini Nasdaq 100 futures, MNQ, I believe. So it's 1/10 the size of a NQ contract. That could be an instrument worth looking at here early next week or even Sunday night. But again, going back, if we got 5 up, 3 down, 618, perfect retracement almost, and we're going up again, does that mean that off of the March low, the Nasdaq is doing a 1, 2, and we're about to hit a 3rd wave up? Is possible. And if that's true, then tech overall is about to get real bullish, and there's definitely some tech charts that would certainly suggest that that may be the case, without going into too much more detail in this video. So I'll leave that with you, just some food for thought, but I think you may have a very nice technical pivot there on the Nasdaq. Okay, NDX, yeah, I said what I wanted to say there. No need to spend much more time on that here. Okay, so back to the Thinkorswim charts. So now that I've gotten out of the way. So Nasdaq, we had basically a doji there on Thursday. So an indecisive candle at the bottom of the range. So a doji is a potential reversal, but it needs confirmation. Well, then we had a nice up day and closed above the T line there on Friday. So I'd say we have a nice doji reversal and looking back to the upside. You can see the oscillator here got oversold on the Nasdaq. Now we're looking to turn back up. So yeah, possibly. Now this is the composite, but basically it's the same same situation with the NDX, Nasdaq 100, and that's where we might have wave 1 up, 5 up for 1, 3 down for 2. Maybe we're about to hit a third wave on the Nasdaq. Just some thoughts to ponder, right? Okay, now weekly candle on the Nasdaq. Anything notable here? Nothing really huge to remark on, other than yes, we have a decent lower shadow there, rejecting those lower levels, but not a strong candlestick pattern other than that I can analyze here. Okay, now the VIX. So on the VIX, obviously we had a nice VIX spike, but you know what? Again, so over here we had a spike in VIX as well, and that was in March. Yeah, so that, I think that was associated with our March lows. Well, look at this. Yeah, we had a spike in VIX, but we couldn't even get back up to those prior spike levels, and now obviously VIX is just tanking. And when VIX spikes up and then tanks like this, that's usually a really good signal that you just put in a bottom and we're heading higher again. So that's my take just on that. And one more thing, the VIX tool. Well, I'm sure you guessed, yes, we have a buy signal once again. Now, one little strike against the buy signal is we didn't have very much of a clear divergence between VIX and VVIX, although on a single bar basis, and these are little 30-minute bars here on this chart, so VIX did diverge as to when it made its peak compared to VVIX on these, I think by a couple, 2 or 3 bars, okay? So VVIX made its high here, made a lower high then when VIX made its high. So you had a slight difference, a slight divergence between the highs on VIX and VVIX. It's not the best divergence, but I did find just at least a slight divergence there. And now we are below the red moving average on VVIX, and of course back above the blue moving average on SPX. So we are on a buy signal once again using this VIX VVIX tool. So I think I'll leave it there as far as the market goes. Might do some more videos over the weekend, cover some other stuff, but yeah, I mean, as long as last week's lows hold, which I happen to think they will, I think the focus should be on to the upside until we get a mature-looking wave 5, perhaps into month end or around that time frame. All right, Serial Trader signing off.